Good morning, good evening, good afternoon, Trader Steve here at Logic FX Trading, and welcome to our news and reviews video on Tuesday the 5th of March 2019. Guys, the last one I did was last week, and basically what we called it was this one here was world slowdown or recession, and it's because I'd found an article by, I think it was Goldman Sachs, and they were saying they were seeing the green shoots of recovery. Now, guys, you've got to remember that because one company thinks one thing doesn't mean that everyone thinks that. So we're going to take a balanced view and look at what news stories have come out since then. Now, the idea of, we weren't saying that there was going to be massive growth in the world economy this year and possibly into next year. But what we were talking about was it just going to be a slowdown, or was it going to be a full-blown recession? Both of those will give us opportunities to get into safe havens, but it's about the timing of it. Safe havens being things like commodities, gold and silver, potentially platinum, also safe currencies like the yen, like the Swiss franc, like the dollar. And at the moment, the dollar, the return you get on the dollar is actually pretty good compared to the other safe havens. So despite the fact that Trump wants the dollar to drop so that he can export more, and despite the fact that everyone's calling the dollar short, at the moment I don't see any reason why the dollar would go short. Of course, something can happen in the meantime, but for now, I think the dollar is going to continue to go sideways. There it is. We're in this channel as far as I'm concerned. At the moment, you can see what I've been saying there. I wasn't suggesting it was going to drop. I was just saying that if it were to drop and give us a setup, then obviously it could come back down into the bottom of that channel. But for now, it's going long. I think it's going to continue to go sideways. It could still push up a little bit depending on what else happens. So let's go and look at our news for today, or for this week basically. And there's two things I want to talk about. I want to talk about Brexit, and I want to talk about this China economy, and also thrown into the mix of that will be the trade deal that's supposedly being negotiated between the United States and China. So I'll not talk too much about Brexit. In the last video I said I was going to talk about Brexit. But Brexit, there's too much to say about it to get into one video, and I think the China thing is more important at the moment. Just quickly on Brexit, we're getting to a point where at the end of this month the UK is going to leave the EU. Whether it leaves with a deal or not is what everybody is, the big concern is. If there is no deal, you'll find the pound dropping, and the UK stock market will drop as well. If there is a deal, you'll find the opposite happening. At the moment, the market is basically saying, this is the pound index. For the last few weeks, the market's saying, hey, we're going to get a deal, and it started to recover. Okay. Now, whether that's going to happen, or whether what I was saying today is we've come to some sort of double top there. Is it going to come back down into this structure? Now, prior to today, we had this as a running flat, guys, and it could still be a running flat. Although, having said that, with a running flat, you'd expect it to drop out the bottom. So that's why I end up saying, well, hold on a wee minute. There's where we need to break through before we're going to get too bullish on the pound. But I suspect we could end up with a 1, 2, whatever way this goes, this could end up being the third wave, fourth wave, fifth wave up to previous highs if there's a Brexit deal. If there's no Brexit deal, then you're going to see it running off in the opposite direction, guys. But why do I think there's going to be a deal? Well, purely and simply because Parliament has set itself up in such a way that if the Prime Minister tries to leave with no deal, there's going to be a revolution within the Parliament, and the government will collapse. So, and then they'll go to Europe and say, hey, we need an extension of this thing. That's the very thing that might push the Tory party side, who are split, might push them to back the deal that's on the table at the moment. The fear of either there being a referendum and there being no Brexit, or the fear of going into this this extended period where the Tory party lose the government and they end up under a Labour government. The people who are against Theresa May's deal at the moment would certainly not want either of those two things happening. So that might just push them over the line to accept the deal that she has on the table. And this news story here is part of that, that conversation. UK and EU backstop talks to resume. I think this is the Attorney General from the UK. I'm not entirely sure. We'll have a quick look at that. He is looking for the legals of the whole thing. Yeah, Attorney General. It is Geoffrey Cox. So he's looking at the legals of the whole thing because basically the UK doesn't want to get caught in this backstop forever, because the backstop keeps them in Europe until some sort of arrangement can be made that keeps the Irish border open, but also has the UK outside Europe. And that's a real conundrum that they can't work out at the moment. So that's the only thing that's holding up Theresa May's deal. If they can get a solution to that this month, there'll be a deal and the pound will go long. There's been a lot of good news, or good sounding news, or good sounds coming out about that. So we could well see a deal by the end of the month, guys. So that's something to keep an eye on. Keep an eye on the pound going long, with in the back of your mind, if it goes pear-shaped, any long trade you have could very quickly go the opposite direction. So tighten your stops, guys. If you get it away from zero, get it on, get your stop to zero. If you get through a pullback and it pushes on up, move your stop, move your stop, move your stop. Just in case you get a bad news story, guys. At least protect your capital. So now we'll get back onto the China thing. Where are we? Yeah, China. If you look at these news stories, and they all come out at the same time. Now, China's super rich are losing faith in the country's economy. Europe's slowdown is worse than investors imagined. And what they're also saying with that one is that if China continues to slow down, Europe's really going to, catch the tail end of that. Because obviously they export an awful lot and import a lot from China, but export a lot to it. So it's not going to help. The other thing as well with Europe is it's going to be badly affected by Brexit as well if there's no deal. So yet again, that's another reason to look for strength in the dollar, because there's nothing on the cards for Europe's economy to strengthen up, and therefore they're not going to be increasing interest rates anytime soon, guys. Stocks sink after economic data disappoints. Okay, that's a result of potentially what's going on over here, guys. Because the throwdown of all of this is that the world's slowing down, the Chinese economy is slowing down. The trade talks between the US and China can either make that slowdown less of a slowdown, or it can make it into a full-blown recession. In other words, if they have a trade war, you'll see a recession. If they sort themselves out, we'll just see a slowdown. No sign of any growth, big growth this year, guys. As a result, oil will probably drop, gold will probably go up, silver will probably go up, the yen will probably go up because it's a safe haven. But the Japanese governor of the Japanese Reserve Bank has said that they will bring in measures to stop the yen getting too strong, because they're trying to stimulate their economy, because they can't even get to 2% interest rate, guys, at the moment. They can't, or not interest rate, sorry, 2% inflation. and their interest rate is already below zero. So, you know, don't be expecting the yen to go too far with this, but certainly gold and silver, possibly the dollar will stay strong because of it. And Swiss franc, guys, have a look at the Swiss franc. And I'm not talking about immediate, this is long term. This is as the year develops, guys. This is the stuff in the background that we need to have in the background. We still trade our charts. We still do our structure analysis using Elliott wave theory, but in the background, we need to know what's going on, and that's what these news and reviews are about, guys. And then stocks sink after economic data disappoints. Now, this is an interesting little story because they're giving you the reason why it's happened. But if we go and we look at the Dow Jones and the S&P 500 on a technical level, in other words, on the charts, well, I've been calling a drop on this for a long time. I called it from here originally. Sorry, let me clean this up a little bit for you guys. We've just done a recording for our daily analysis recording that I do for my traders, guys. But we've been looking from here, we've been saying, guys, this will drop. And it will either be a correction of that move up before it continues long, or, as I suspect, if the world economy is going to slow down, I don't see that top being broken anytime soon, guys. So in other words, if we have a slowdown, this could move sideways over the rest of the year, maybe the next 18 months. And if there's a recession, you could see it getting down to here, sharpish. So any short you can get into here, I think it'll be worth it. Remember, get your stop to zero in case it just turns out to be a short pullback and goes long again. But if you get into a short from here on any of these charts, including the S&P, short from here, remember, you've got to find your setup. You could well be into a very nice pullback, guys. May happen, may not happen, but you may as well be in it in case it does happen. Now, why do I think that will happen? First of all, we've looked at the fundamentals. You can see that the world economy is not going to grow, so why would this push long? Secondly, from a technical point of view, if we go out on this and we look at it, we need to go further than the day. We'll go to 4 hours, or sorry, 4 days. Look at the structure. We've had a push up. We had a correction. Second wave. We've had a 1, 2, 3, 4, 5. We're in another correction, guys. This will not go long. You know, listen, there's nothing definitive. There's nothing definite in trading, but the chances are this will not go long, taking everything into consideration for quite a while yet. It may just come back to that trend line there, or it could even give us a deeper correction of that move before it goes. Remembering that this is a 4-day time scale, guys. If that were to happen, there'd be an awful lot of downside to all of these markets, guys. I'm not saying for the moment that that's going to happen, but certainly we could get a sideways movement. You can see we need a much bigger correction than what we've been seeing so far. Let's just clean it up and have another look at it, guys. We're looking at that compared with that. So I would say that this has a long way of sideways movement to go. Okay, so you can see my reasoning behind it. If you look at the other ones, obviously the UK is a little bit different. But yet again, I could see sideways movement in this. The French, sideways movement, guys. German, this is on the 4-day time scale I'm talking about here. So obviously there's still opportunities for long and short within that. But don't be thinking this is going to push on up here, guys. Not yet. Not this year. Possibly not next year. And maybe into 2021, you could start to see these tops being broken. Okay, guys, that's, you know, I don't want to make these too long. That's 10, 15 minutes. Probably enough for today. The story will grow, guys. If you watch these, you'll understand what I'm saying in the next one and the next one and the next one. Okay, I hope that helps. I'll speak to you all again later in the week. Bye for now.